Welcome to the Cashflow Academy YouTube page. Today we're going to talk about the U.S. entering the Israel-Iran conflict. The U.S. has officially entered with bombing the nuclear sites. We're going to talk about what that means. We'll talk about some metaphors, the Chinese parable, unknown unknowns versus known unknowns. A lot to get to, but before we do that, make sure you hit that subscribe button, hit that bell to be notified as well so that you know when videos are coming out, and let's get educated as much as we can. We always consider ourselves students of investing. Even though I've been doing this for 25 years, I can still learn. So what is the Israel-Iran conflict? Well, we did a video on that for the YouTube page, and we talked about that to this point, both have bombed each other, and now it's a question of whether there's an escalation, whether there is more dominoes to fall. And certainly the U.S. entering the fray and bombing the nuclear sites, that puts us as a target. That puts us here in the U.S. as basically entering the war, and now we're officially a part of that. So, the president said, well, now that we've bombed these nuclear sites, now is a time for peace. I'm just not so sure that Iran is going to see it that way. And here's the thing. When you look at news, you always have to be careful. I always tell the Chinese parable, which is a Chinese farmer. He has a son, and he loves his son. And one day they have a horse as well, and the horse runs away. And the people from the village say, "Oh, we're so sorry to hear about your horse running away. That's terrible news." And the Chinese farmer says, "I don't know if it's good or bad news. We'll find out." The next day, the horse comes back, and it has another horse with it. So now the Chinese farmer has two horses, and the people from the village cheer, and they say, "What great news." And he says, "Well, I don't know if it's good or bad news. We'll find out." So his son gets on the new horse, tries to break it in, falls off, breaks his back. People from the village say, "What horrible news." He says, "I don't know if it's good or bad news. We'll figure that out as we go." The next day, war breaks out. The leader of the military comes to get the son to put him on the front line. He can't go into battle. He's got a broken back, probably saves his life. The people from the village say, "What great luck, what great news." He says, "I don't know if it's good or bad news." So the point is that everything you thought was bad news was actually good news, and everything you thought was good news was actually bad news. And that's kind of how it works in the markets. Is you have to be careful to label news. News is just news. And so what we like to do is run it through a filter of saying, did the market know it was coming? Did the market anticipate this piece of news? Therefore, they could already have been pricing it in. Perhaps it's quote unquote bad news, but the market already knew that the bad news was coming. Maybe even the whisper number was worse than what actually transpired. An example is what we call a known unknown. Known unknowns happen all the time in the market. Every time a company reports earnings, that is a known unknown. What is known? The date, the time, everything about the company reporting is laid out ahead of time. So the market is fully prepared. Analysts have been following this company. Analysts have been doing the work. Customers and all these people have now passed through those doors, and they've done channel checks and are watching how many customers are going in. They're really dissecting the news ahead of it coming out. Is there an unknown portion? Well, yes. That's the actual news, the actual numbers from earnings. We don't know what the actual numbers are going to be, but because it was already known ahead of time, the market got out in front and really started to figure out what the numbers were. And so that's why earnings are not usually a huge surprise. They're a known unknown, and there will be a reaction, but commonly there's a big dud. There's what we call a volatility crush because people are nervous, they're anticipating, and then the earnings come and go. Right? Sometimes we might even be surprised by the reaction. Let's say the company loses 5 cents. Well, that's bad news. But if the whisper number was that they were going to lose 7 cents per share, if the whisper number and the analysts were saying, hey, it might be, even worse than that, and then they come out only missing 5, the stock might go up, even though it was bad news. And so newer traders think, well, I can just follow the news. I'll just label it good and bad. It'll be pretty obvious that if a company reports losing numbers, that must be bad news. No, it's not that way. Remember, all of these things have been anticipated because it was a known unknown. And a lot of times the bad news or the, again, we just call it news, but the people's bad news is actually good news because it wasn't as bad as the whisper number. So that brings us to an unknown unknown. Now, unknown unknowns are different. Unknown unknowns mean that there was no date, there was no time. This was not planned for. And yet there's all the unknown ramifications, and they happen with some frequency. But unknown unknowns, what are some examples? Whether good and bad ones, right? AI might be a good unknown unknown. The internet creation might be a good unknown unknown. If they cure cancer, that would be a good unknown unknown. It's not planned, it's not scheduled. And then there's all the questions of, well, what does this do for the world? Is this good for society? Is this good for economic growth, et cetera, right? There can be bad unknown unknowns. 9/11, terrorist attacks, COVID, all of these things were not planned for. There was not a date, not a time, not a preparation for them, and therefore the market cannot have them priced in. The market is caught flat-footed because they literally are an unknown unknown. They came out of nowhere, and so any type of war breaking out, those sorts of things tend to be an unknown unknown. And thus, we pay more attention. We realize that those can be big volatility events with a lot of follow through. Follow through meaning a lot more volatility, a lot more run. And so when we did our first video on Israel, Iran, we said, look, this is an unknown unknown. The bomb started flying. Nobody had that date and time, right? We didn't know that Israel was going to do that. We didn't know when Iran was going to bomb back. We didn't know that the U.S. was going to enter the fray. These are all ongoing and they're all unscheduled, unplanned for. Now, that doesn't mean it's the end of the world, but it does mean that it can create more volatility, more follow through, and more uncertainty. So if we look at this data and we say, well, this is bad for economic growth, this is bad for stability, this is bad for geopolitics, this is bad for such and such, and we start checking all those boxes, we know the market does not have it priced in because it simply couldn't. It came out of nowhere. That's why you saw oil with the big jump. You'll probably see more reaction. This is over the weekend right now, but the futures are very likely going to be trading lower. Oil, gold are very likely going to be trading higher. And again, these unknown unknowns, now we're starting to see more dominoes topple. There can be a little bit more volatility. So I would anticipate we're on the cusp of seeing a little bit more stock market downturn, a little bit more sustained move, because generally speaking, unknown unknowns have more volatility and more follow through. And since this is going to check a lot of negative boxes, the market doesn't have it priced in and probably won't have it priced in for at least a couple of weeks. So hope you've enjoyed this video and learned a few more things. Again, hit that subscribe button, continue to learn, to grow your knowledge of the markets, and it will help you to make money and take advantage of the market opportunities that come your way. We'll see you next time.